Michael, welcome to F.A.C.E. I'm going to make you the presenter now, and looking forward to hearing your voice and seeing your screen. If you have any issues, let me know. There's a screen for Michael.
Can you hear me, Dale?
Hi, Michael. Great to meet you.
You as well, sir.
Thanks so much for joining us today. Your reputation precedes you in here. You know, I also like to bring on a lot of people that aren't well known to lift them up, give them visibility, because I'm a believer that it's not always the famous that are the best.
Right.
And sometimes it's the people that no one knows of that are great traders. Sometimes the famous are just great marketing people like me.
Mm-hmm. There you go.
So great to meet you and have you here. You're a mentor of mentors, because I've interviewed one of your mentees, Saeed, and he gives you credit for teaching him, and the response on Twitter was pretty big. So you have quite a following. So I'd like to start before you had a following, when you were just looking into the markets and how that happened for you. Did you have mentors? So why don't you jump in a time machine, buddy, and tell us about the beginning of your journey into trading.
I started in 1992. November 5th of this year will be 26 years for me as a follower of the markets.
Okay.
I had an uncle that was fortunate enough to make some money in the sugar market as a commodity trader, and coming from a modest upbringing and a very, very low income bracket household, he was the highest net worth individual in our family, and everyone wanted to have the things he had. And he used to always tell me, the richest people in the world are futures and options traders. So when you get out of school, get yourself a good career, make some money, and start trading. And as a 16-year-old, I really wasn't interested in hearing that. But when I got out of school,
you were just getting your driver's license, and you could go and pick up your girlfriend.
That's right.
Yeah.
But it wasn't until actually I became a working adult and hated life. I didn't want to be working for someone else. It just wasn't for me.
What were you doing? I'm just curious.
I was actually filling candy machines and soda machines and coffee machines. I was a vendor. I'd go around and do a vending route.
Yeah.
And I worked about 13, 14 hours a day. And
that could motivate you to want to learn how to trade.
Especially for $183 a week, it was it was bad. It was really bad.
What a great story. So you actually had, people write books and make fun of it. You had a rich uncle, and you had some good, he gave you some great advice early on. So did he also, when you were finally ready, did you work with him at all, and did he teach you anything?
Actually, he had like more or less like a one-shot wonder type event where he made money in one market and was never really able to repeat that. Okay. But I held on to that idea that if he could get lucky, there has to be someone out there that's doing this consistently. And I got inducted to trading by much like everyone else in the commodity markets back in the 80s and 90s by way of Ken Roberts.
Oh gosh, 1, 2, 3 bottoms. Did you? Right. Did you? Yeah. and the cowboy hat and
cigar, the whole show. Yes.
Yeah, all of that. See, that's what I was talking about. Some people that are famous are better marketers and traders. So, Ken Roberts. Then you're from the era where you probably used to keep up your charts by hand, like use commodity perspective.
Yes, we used to do open, high, low, and close. You used to draw them out and used to update our indicators. It was all by hand back then. So, some of my students, they don't like to think of it like that. They're used to high touch, high tech of their smartphones or computers, but we didn't have that back then.
Okay, so from Ken Roberts, talking 1, 2, 3 bottoms, which are really either ABC or 1, 2, 3s. what was your next step after Ken?
Well, as a result of buying his material, I got on a mailing list of Larry Williams, and it wasn't until I got in touch with his marketing team, and they, offered some things. I purchased whatever I could get from him, and it was about that time I started finding a little bit of a rhythm. But I only understood buying or going long. I didn't trust the idea of going short. So my initial foray with commodities was a loss with an orange juice option. And I was trying to do a 1-2-3 formation based on some recommendation by Ken Roberts, and it was wrong. But long and short is, as fortunate as I was to be inducted to this industry by someone like Ken Roberts, and I'm thankful for him. I wasn't able to make any money with his material, but I'm thankful for him that he allowed me to get in, the rotation of eventually finding information that was useful to me, and that was by way of Larry Williams.
Okay. All right. So I usually ask this question, how many years did you search and work and screen time before you made some type of breakthrough epiphany to where you said, I do know how to do this?
Well, I had initial luck after getting with Larry Williams. Everything was in a bull market back then. And I was able to catch a big move in the Japanese yen, big move in the coffee market. In 1995 in July, I caught a big move in wheat. And that was the one that retired me. I didn't really do anything after that. And I thought I knew what I was doing then, but I actually didn't. I actually over leveraged a lot, and I didn't really understand money management. And all it would have taken is a small real retracement on the wheat market. That day I actually decided I was going to be done working. It would have wiped me completely out. But
Did you ever blow out an account, Michael?
Oh yeah, absolutely.
Okay, I mean, who hasn't?
Right. Anyone that says they haven't, they're liars.
Yeah, most have.
Yes.
Even the guys I know that really pull money out of the market nowadays, they all experience that. How did you make a comeback after going through something like that's more serious than a drawdown? Drawdowns are just part of the process, but blowing out an account psychologically. How were you able to recover and have the courage to give it another go?
Well, I had to more or less eat crow because I went from a humble, quiet disposition to a braggadocious, arrogant individual. When you start making big money, it's hard to keep that in check as a young man. And
yes,
I was humbled back then. It was very humbling for me to admit to my closest family members that I had a lot. And then I lost a lot. So it caused a lot of anxiety. And for me personally, and I know maybe some of your viewers won't subscribe to this view, but I turned to God. That was my fix. So it fixed a lot of things mentally for me. So from a psychological standpoint, it didn't matter to me if I was successful. And when I stopped worrying about the money and just keeping a low end, objective, all I was trying to do was make $1,000 a month and retire by 40. And over time, that became realistic. It became easy. And for months, I could have been doing a lot better than I was initially. And then I started understanding money management and applying more. And then it just grew from there. But I would say it wasn't until about 6 years after even being profitable, 6 years until I knew exactly what I wanted to do to be consistent. Because I would always chase something new. If Larry Williams put out a new book or a new, indicator or a technique or something, I was buying it hook, line, and sinker. And I'm not trying to disparage anyone from doing those types of things because it helped me become the trader I am. But, there's a lot of things that we go through as a developing trader and we ingest as far as supposed knowledge or insights, and it really isn't helpful at all. It feels like it is because we're doing something, and that's what we want to do as traders. We always want to be involved in the marketplace. We want to be engaging somehow. Otherwise, we feel like we're wasting opportunities. And when I found the setups that I like, it became crystal clear to me what I want to be doing. And if I didn't see them in the chart or the probabilities for them to form, I really wasn't pressed to get into the marketplace at all, and it created a different mindset and a paradigm shift from that of that's taught by books. That, they teach you to be an action hound. Take your setup, push your edge. No, those things didn't work for me. When I took a more relaxed approach.
You found out less is more?
Yeah, absolutely, and that's what I preach. It's not the quantity, it's the quality of the things that you're looking for.
Can I make one comment? Not many people bring up that, they went through some type of conversion experience through trading and being broken in that way. But you ever see that painting of a shepherd that's carrying a lamb over its shoulder?
Yes.
Okay. In the old days, the shepherds, when they had a stray lamb, what they would do is break one of their legs and carry it around that lamb until it healed. And then the lamb or the sheep learned to always depend on the shepherd. And so sometimes that's what God does to us. He breaks our leg. So, I think that I appreciate your openness on that. So why don't we get to what most people are interested in, and that's money. And tell me what you see happening here in the Dixie. What I see, you have no indicators, some squares, some lines. So you trade pretty naked. I hope you keep the shades drawn.
Yeah, I do incorporate some things on my chart, but it's not like an indicator like you would see from a platform or anything like that. I do make notations with like rectangles just to draw out an order block, or I draw a reference to a specific equal high or equal low where there would be a stop. But as far as the dollar index, I'm looking at the equal lows that we had in here. We just pierced through.
Yeah.
The obvious next level of liquidity is going to be above these highs in here. And then we have this inefficiency right here. Okay, and right above that, we have that old high, old low back here. So from a traditional support and resistance standpoint, I think there's a lot of value for that to come back in play. So around 90, 80 to 91 big figure. It would be interesting to see it come back, at least at the minimum, go back above this high here. Because if this continues going lower, and honestly, I think the dollar is going lower. I see 87, 85 in the cards if we can reject once we get back above these highs in here. I mean, we got a pretty good mature downtrend going on in the dollar now. So it's not unreasonable for it to come back up in a deeper retracement, knockout trailed stop losses for anyone that would be bearish on the dollar now, pick up some more liquidity, and then make another leg lower. That's my expectations.
What would change your mind that we're not going up there, and perhaps we don't take out 90-50? What would be the first indication or trigger that scenario is not playing out and we're going to new lows, perhaps your 87 level you were talking about earlier, not later, but maybe from here? What would tell you that?
I just want to make sure I understood your question. What would negate this idea I have in mind here? Is that what you're asking?
Yes.
Okay. If we failed to stay above, let's say Thursday, Wednesday, Tuesday. If we stay above Monday's high, as long as we're staying above that, I think that's what's going to happen. If we lose Monday's high, then we're probably going to just roll over. But to me, it's just too deep of a retracement to just stop here.
I hear you. Okay, so great look. And you're a longer-term bear. Is this the main instrument that you trade, or are you a portfolio trader? Do you have several positions on at the same time? What would you say is the max amount of positions that you have on, or different instruments that you have on at any one time?
Well, I'm primarily a fiber or cable trader. I use the dollar as like a barometer, tells me what I think I should be doing from a macro standpoint. But I only trade on
cable. Why did you select cable as your main instrument for trading?
I traded a lot as a futures trader. I transitioned from futures to solely FX in 2006. So I haven't really done any other asset class since 2006.
Okay. And so what's your take on the pound? Let's go to your bailiwick and talk about it. Lately it's been underperforming the euro. So I'm curious as to what your take is here. Now To me, it looks somewhat positive. Are you in the same camp?
Longer term, I believe we're going to take out the high here.
Okay.
My concern is do we need to come all the way back through and clear up this inefficiency? I don't want to see it do that. It certainly is kind of like all of this price action is really just standing on top of this one candle. Now,
why do you call it inefficiency? They're large, directional, impulsive candles. What's inefficient about that candle?
okay, from a standpoint okay, I'll give you a contrast. What we learn as retail traders from textbooks, teachers, gurus, and educators, price moves because of an indicator. It indicates that price should go higher or lower based on overbought or oversold, and that's not true. What the market does is it seeks liquidity, and when the market's being driven, there's engines that produce the market's movement higher or lower. And once these engines start delivering price higher as a market rallies like this, price will skip. Not every single one of these price levels will be offered. So kind of like as a futures trader, and you can appreciate this because it's a gap.
Okay, like air pockets on the way up.
Exactly. I like to use the analogy of a paint roller. Okay, imagine if you had a paint roller and you applied paint to the wall, and you start the roller to the wall here and you start rolling it up. In the first couple inches, it's going to be a real rich layer of paint. But as you keep going higher, it's going to start getting pockets where the paint really wasn't delivered that well, and you got to go back down to it, fill it in. That same thing happens in price action. So
right,
if we look at price action, and this is something your listeners can do as an exercise, it doesn't matter what time frame you do this in, but if you look at every single time where a up candle, the longer the up candle, better. Okay, you don't want to do it with like little short stubby candles, but the candle, if it's long, take your chart, print it out, and take white out, or kind of like block it out, and watch over time how price will go back in and fill that in. Now, as a futures trader, we had the gravity of closing.
Right.
When prices would close and the next day's opening, there would be a difference between that, unless you looked at the Globex market. Well,
yeah, we knew how to trade gaps. They
yes.
just don't happen much in FX because of 24/6.
It's a 24-hour, right? But they still exist. They still exist, and the inefficiency is that price has not been offered on both sides, buying and selling here. It's been an imbalance of only buy side delivery offered. So price will inject volatility on the upside, but the sellers really didn't get a chance to do too much in here, and the buyers didn't really get a good chance to buy at all the levels that were offered in the open to the close. So if you look at every single time that the market will want to retrace, well, if you look at this here, this down candle here, we left this high here. Let me zoom in a little bit so you guys can see it. Let me go one more time. All right, so we have the market rally up, take out this old high here. I don't really concern myself with the wicks. So we have a slightly higher high here, and then we rejected that. This down close candle, just think of it as that paint analogy.
Okay.
It's been offered on the sell side, then the next candle it opens, and then it goes up a little bit and then drops down. So these two candles have only offered what? Buy or sell delivery. Only sell delivery.
Right.
So the imbalance is it's only been selling, but where's the imbalance really stopped? This candle right here, where its low is, the next candle here, that open. At that open to the high, that's when buy side delivery was offered. So the imbalance ends at this opening. And you can see the bodies of the candles stopping right there. See that? So the market retraces up to that price point perfectly. It's precision. And then the algorithm will allow price to start dropping lower again. If you look at these inefficiencies, and there's a lot of things that go along with it, I'm just giving you one element, very simple approach to it, but it gets even more radically precise than what I'm showing you here. And it's on every time frame. So the key is, and this is what I've done over the last 15 years, is look for opportunities where price will have these inefficiencies on a higher time frame, and it creates like a magnet effect. And if I can trade in that direction, I don't look at trend lines, I don't look at moving average crossovers, even though I've used them to teach the concept of momentum from on a higher time frame basis. I use imbalances and liquidity pools, which is stop runs, really to frame all of my trade setups. So either I'm trading inside of a range or I'm expecting the range to be broken from a directional standpoint. But
okay,
it really is all hinged.
I mean, that's great stuff, Michael. In fact, someone in our community LaShawn Turner is asking if you can show your ICT order block. And, you know, if it's proprietary, I understand, but she said very fascinating, the ICT order block.
Okay, and that's pretty much what I'm known for. When I stepped
Okay.
out on the baby pips, that was like the first thing that everybody gravitated to, because they could see something and it wasn't relying on indicators. The problem is, at first glance, it looks like supply and demand, but I don't stop with just the most recent level. Like they'll teach like only use fresh levels and don't cut through candles. Well, if you don't cut through candles, you won't get the breaker. Okay, and I'm going to amplify what she's asked for, or he. I'm sorry if it was a man or female. I'm not sure what who asked, but these up close candles. Okay, we're looking at a daily time frame. So if we had a way of forming a chart, creating one candle for every 3 days, this would be one singular up candle. Now this candle, or series of up candles, is all one order block. Now, what is an order block? An order block is where large institutions, banks, they will sell into that rally. Large institutions have rules. They cannot sell short on down moving markets. They have to sell short as it goes higher, and they can only buy when it goes lower. That's the only way they're going to get their pricing, and because their sheer order size, it requires them to do that. So the order block theory is, if we see price rallying up and we're taking out old highs here, if it rejects, I don't need to know that it's going to stop here. I don't try to pick tops and I don't try to pick bottoms. I want the institutions to leave their telltale signs and hallmark signatures in price action. So while I have already shown you the inefficiency and the rebalance at this opening here, because the wick offered buy side, anything below that is again all sell side. Well, we see the balancing of those orders right here, and then look at the reaction we got there. Go further, cut through this candle here, okay, and you'll see these up close candles. What's happening here? Well, anything that was residing above these opens and closes on these candles here in the form of a protective stop, they're running them out. That creates this as a breaker. Now, I teach two styles of breaker. Breaker is basically breaking the market structure. Anyone that was short that had to stop above these bodies of these candles here, they have been neutralized. They can, they're not in there now. So when the market comes down, market. Exactly. So now my eye goes right to the bottom of this candle right here, the body, not the wick. I'm looking at the body of the candle here. When price trades back up to it with these candles here, right when we hit this here, we are in sell territory. I'm going to start looking for reasons to go short. Now, this is where everyone looks at my information and my free tutorials, and they just think every up close candle is a bearish order block, or every down close candle is a bullish order block. You have to apply some context, and I'll give you some more context and apply what I already showed you. This is the stage. This is a bearish order block. But inside this order block, there's going to be an inefficiency that you have to use to set up the signal. This is the opportunity, but it doesn't form until you get to this level right here, where we described where it was only going down. Well, when price starts trading up these up close candles, it goes right to the opening of that candle and stops right about that same level. Goes a little bit with the wick, but then we have delivery on the downside. This element of price delivery is where institutions come in and they do their buying and selling. It's not based on indicators. It's not based on trend lines. It's not based on any of those things. That's all, red herrings to get you thinking. And once in a while, they do work like anything else, but that is what's sold to us as retail traders. We buy all these books, and I own over 2,000 books. I've read every single one of them, some of them twice, in hopes that I'll understand the markets better. And literally, I have a checklist of maybe 12 books out of all that I think is useful. And most of them aren't really indicator-based things. They're all the way you think about the market.
Okay, name a couple.
Well, trading for a living, not the stuff that's technical. Okay, Alexander Elder's book about the way he kind of like draws the contrast between an alcoholic and a loser's mindset. I gravitated to that. I've never drank a drop of alcohol in my life. I've never taken drugs, I've never done anything like that. But I grew up in that environment. And the way my family interpreted what I was doing in the markets, they said I was going to be a loser like them. Yeah, it's gambling. Yeah. It's a pipe dream. Right. Well, they're all asking me for money today. They're all working. I don't go to work. I'm talking to you today. So, and it sounds braggadocious or arrogant.
This is fun, huh?
Yeah, but you know, you have to discount those people.
You want to go back out and fill up a candy machine today, Michael?
No, I don't want to do that anymore.
All right.
I don't want to do that.
Got some fascinating stuff. Now I know why you have such a following, Michael. So you were a publisher. Your work's all over the place, and you have a YouTube channel, because on Twitter, there's no website. There's nowhere to find you. I don't see you tweet much. So, you know, I'm sure besides your fans that have been here today, that there are new people hearing you and will hear you on the video. What's the best way for people to stay in touch with Michael Huddleston?
Well, the best way is obviously through Twitter. That
Okay.
handle is I_am_ICT. I keep everyone up to date as far as what I'm doing there. My website.
And let me ask you about Inner Circle trading. Is it trading or trader? How did you come up with that handle? And what was it? Did you at one time have a formal website and teach people, and you know, you had enough of it and you just want to, you know, be left alone and do your own thing and make a video once in a while?
Well, I started calling myself Inner Circle Trader as a kind of like a hook. That was like I wanted to be the Inner Circle Trader back then. Yeah, I didn't know everything I know now, but I was on America Online, and I was teaching people before I really should have done it. And I got myself in a little bit of trouble, almost. I was doing kind of like recommendations, and everything that I was talking about was doing very well, but the CFTC tapped me on the shoulder, and I got subpoenaed and said, look, you know, what you're doing is not lawful.
Yeah,
and
you have to be registered.
Right. So I had to go underground for a little while and just learn. I didn't put any disclaimers out. I didn't know I had to do those types of things because, you know, who's going to listen to me? But apparently a lot of people was listening to me back then. So
okay.
The Inner Circle Trader handle came from Larry Williams. He used to do workshops, and he would call them the Inner Circle workshops.
Okay.
And I was like, oh, well, trader, Inner Circle Trader, and there you go. And then it just became shortened by one of the ladies over on Baby Pips.
Okay.
She gave me the acronym ICT.
You know, who wouldn't want to be part of the Inner Circle?
Yeah,
as we all feel outside most of the time. So anything you want to wrap it with, buddy? Like the most important thing you could tell people, the most important lesson you've learned over your long trading career? You know, I've asked Jack Schwager this question, and he said, find a trading style that suits your personality.
Absolutely.
What would you tell the audience today?
Well, the first thing is don't believe 99% of the things that you see other people say they're doing or know, because 90% of them are doing the same things that the books are teaching, and they probably don't have a lot of discipline. So the folks that can show and teach that before the fact what's going to happen and give a great deal of detail as to why it should take place, gravitate to those types of people. And I'll give you one, and I only have one that I would recommend outside of what I teach, and it's Chris Laurie. He teaches price action based analysis, and it's not a lot of fluff. It's a lot of work to understand it, but anyone that's ever looked at his material, you can see it's nothing like everything else. It's not retail based things. It's all price action, no indicator.
Right.
You know, reliance.
Chris is excellent.
I think that if you're a new student of the markets or a new trader, the worst thing you could do is try to build a report card view of how well you're doing based on your results, because you don't know anything. And I'm going to tell you, the first 10 years of your trading, you're not going to know anything. You're going to be learning a lot about yourself. And that's the biggest thing that's going to be a barrier to you is the person staring you right back in the mirror. That person, whether you realize it or not, is going to ruin you or allow you to succeed. And you have to give the permission to do either one. And if you don't take control of it early on and recognize those repeating things that cause either ruin or success, the only way you're going to be able to do that is journal. You have to journal everything you do in the marketplace, your thoughts. When you're right, they're not important. When you're wrong, that's where your lessons are going to come from. All of your learning and your development is going to come from where the pain resides. Most people are going to quit this industry because of the pain and the uncertainty. The ones that actually do well are the ones that embrace the uncertainty and accept it. And we don't have to be perfect. I don't have to be right on every trade. I don't have to make a lot of money on every trade. And I don't have to do 90+% accuracy. I just need to be consistent. Am I doing the same thing over and over again? Does it give me what my reasonable expectations should be? And am I following the rules I've put in place for myself? If I do that, and if I can communicate that to my students, the process takes care of itself. You just can't worry about the money. And it sounds like an oxymoron because we all get into this for the money. But if you start worrying about it or not having made enough or looking at a trade that you got out, whether it be practice or live, going back and looking at those trades and saying, I wish I would have. As soon as you do that, you're making an error. You can't do those types of things because once the trade's closed, you can't make any more money and you can't assume any more risk. So there's no point in doing that. The only thing you can do is look at what you're doing wrong. Because if you're making money, no one quits this business because they made money. It never works that way. They stop because they've been taken out because of a margin call, they've blown their account, or they just can't weather the ups and downs. It's normal. That is normal. But a new trader, when we come into this, that adversity is alien to us. So wait a minute, my friend said he's always making money, or this guy on the internet, or this ICT guy, he's always showing wins. It doesn't always work like that, and especially as a new trader. So the hardest thing you're going to have to deal with is the mental aspect of it, the psychological standpoint. It's not the trading is difficult, it's the thought process behind it, because it's easy when you look at the chart, but when you put your money on the line, suddenly you start thinking, man, this thing's already went back against me 20 pips. I'm up 80, but it went back 20. Should I hold on to it? I got a goal of 110 pips, and you start wrestling, and you have to learn a lot about yourself. And those are the points at which I think traders should spend the most time delving into, not where's the next setup, what's the next pattern, who can I learn more from, because all you need is one setup, one particular pattern or setup.
Let me capsulize this. Run away from people who say they have the secret of trading, because there is no secret. The secret is hard work, perseverance, and persistence, and also journaling, because from an NLP perspective, you have to write things down for it to make an impression on you, and you learn from your mistakes.
Absolutely.
So I have your philosophy here, buddy?
Absolutely.
Well, Michael, I want to thank you again for taking time out of your day to edify F.A.C.E, our community. And like it or not, you're now my trading warrior brother. It's been a pleasure meeting you, and I wish you continued success. And I guess we're brothers in more than one way in trading. So again, Michael, thank you very much for being with us today. Appreciate your time, and we'll have this video out in the Twitter sphere in a few hours.
Awesome, sir. Thank you very much.
Okay, that was Michael Huddleston, Twitter handle at I_am_ICT. Looks like the dollar's coming off a little bit here, guys. And we'll wrap it up with the TGIF. I want to thank all the viewers from investing.com for joining us today. Good hunting the rest of the day. If you join ForexAnalytix, you'll see the team in the private chat. And remember, most of all, don't just count your pips, count your blessings. And I'll see everyone to wrap up the week tomorrow. Thank you again, Michael Huddleston. It was a pleasure meeting you. Adios.